Hi, this is Paul from globaltradingsoftware.com, and this is a oil futures trading strategy. So we're using the xBrat Range Breakout, the manager to manage the trades, and that's part it's bundled together as a trading bundle for the Range Breakout with discounts. So it's a cradle to grave bundle for the breakout. Also using the bias depth heat map here, and I'm going to be discussing that as we go along during this summer, and there's only 1 month left of it in my mind. There is going to be the bias depth heat map when you purchase the cradle to grave is going to be free, and that's worth $299. So I want to go through these three types of trades with the range breakout, and the reason why we've got this third trade now, which is a reversal, is because I've had that module built for the auto trader as well. So we're going to go through the three modules now, and again, you can trade these manually using this software. So we use oil on the 5 minute. We get the oil pit open, which is 1500 European time, 9 a.m. EST. The first 5 minute candle defines the range. It's labeled red, so we're only looking for a short initially out of that range, and you can see the actual range is colored in red. So for me, when I'm setting up these auto traders, I'm looking at targets for this first range, and I will talk about a different type of trade for the continuation later. So I'm just got to set a target in mind. So when we break out of that range, I've got between 30 and 50 ticks. I'm always looking for 50 ticks. That's $500 per contract. And that is what we got yesterday. Well, we got more than that. But again, you've got to be very disciplined on this. You've got to look back, do your back testing. I found at this moment in time, over the last 60 days, 50 ticks is probably the average and what we need to get those high percentage winners. Then we have the reversal trade. So some of the rules for the reversal trade, not all of them, I'm just going to go through quickly, is that within 5 candles of this opening range, we turn around and come back through the top of that opening range there. So basically we've reversed that initial bearish move with that bearish bias, and we've got that trade. 1, 2, 3, 4, 5 candles. This is the 5th candle, is actually in and very close to breaking out the top of that range. This time it's a target trade again, but only 30 ticks. You always got to have a lower percentage for that initial breakout trade. So it's a reversal trade within 5 or 6 candles. Me, it's 5. On the auto trader, what will happen is you've got 1, 2, 3, 4. This candle closes back within the range. The auto trader automatically puts the trade back on 2 ticks above the other end of that range for that reversal, and you can see it took the 30 ticks. We then come back down. Now the next trade is what we call a continuation trade. So it's a continuation trade. We've already had that opening range. We've traded that opening range. We've traded the reversal. Then further on in the session, and you know, this could be 2 or 3 hours further. In this case, it wasn't. It was a little bit further. We call what's a continuation trade. So we're continuing to trade that opening range. So we get a nice green candle close in the range here. The bias turns to green. Now this is where the bias depth heat map comes in. The following candle there, you see all 6 time frames on the bias depth heat map are green. That means we've got that confirmation for that continuation trade. Now we manage this in a different way. We don't set targets. We use the manager to manage this continuation trade. So what happens is you see the manager turns green at this point here, the ribbon. We get this big move up on this continuation trade, and then it turns red around about here. So we count 4 candles back is about this point. So this was 120 ticks trade, and that was all yesterday. That's all we could get out of oil yesterday. 200 ticks. Okay, that's $2,000 per one contract. Now you will not always get a continuation trade. You will not always get a reversal trade, because we might in fact just get that 50 ticks, it might just keep going. But you've got to have these three strategies using this one sort of set of trading indicators to look at the initial range breakout, the reversal, and or the continuation trade. In this case, we got all three, and I thought it would make a great video to show you that now we've got that reversal strategy narrowed down. We've actually added it to the auto trader, but you can trade that manually. Just watch this video again. So let's just go back to the bias depth heat map. We were all 6 time frames on this initial breakout to the downside, and that's what we need for that confirmation. All 6 time frames were red, so we got the confirmation and we traded that breakout. It's very unusual to get a quick reversal and all 6 time frames were green, but they were in this case, so that gave us even more confirmation. But with the reversal trade, you need 4 or 5 out of 6 to get that reversal, because it's a quick snap reversal. Get in there, get that 30 ticks, get out. But then the continuation trade, we must have those 6 time frames all green if we're going to go long, or all red if we're going to go short, to get that confirmation. And this continuation trade is we're using the manager then to manage there, because a lot of these continuation trades we get that we get the bigger moves because it's sorted itself out, it knows which direction it wants to go, and we get usually those bigger moves. So hopefully that helps. It's a great set of trading indicators. It's the bias depth heat map is going to be free during the summer of 2022 when you buy the cradle to grave bundle for the breakout. So it's the xBrat range breakout and the manager combined together give you that bundle, and I think it's discounted at something like 21% when you buy as a bundle anyway. Then you get in the $300 bias depth heat map. Check out the links below in the video and take advantage of this great offer and great trading strategy.